CRS and FATCA have been introduced worldwide in recent years. They are the ultimate tools for snooping governments to discover the wealth of their citizens and residents overseas. Like all big government projects, CRS and FATCA are destined to fail. CRS and FATCA are full of loopholes. FATCA was introduced by the US government in 2010 as part of a job creation bill. It was supposed to generate more tax revenue to create jobs in the US. CRS was introduced in 2017. The Paris-based OECD developed CRS. Governments around the world were pressured to sign up to share financial information. All the major tax havens are part of CRS. Both CRS and FATCA seek to automatically exchange financial information between governments. They oblige banks to confirm the country of residency of each client who controls an account. If the client is a U.S. resident, they send the account information to the U.S. government under FATCA. If they are a resident of any other country, CRS applies and the bank will be obliged to send the information to that country. This means that private financial information is being sent to the tax authorities in your country of residency. CRS and FATCA have abolished bank secrecy. Fortunately, there are exceptions and workarounds. CRS and FATCA are enforced by a series of agreements between governments. They are integrated with the KYC procedures of banks and other financial institutions. As part of the pressure on overseas banks to comply with FATCA, the U.S. government threatens a withholding tax on coupons and dividends. They also have the sanction of excluding a foreign bank from the U.S. banking system and dollar payments. As of 2023, there are still 54 countries that are not part of the Common Reporting Standard. The U.S. government has signed intergovernmental agreements with 111 countries. The only way for banks to enforce CRS and FATCA is through a process of self-certification. A new client must tell the bank the country where they are a resident and a citizen. If you have documents showing you're a resident of a non-CRS country, you won't be subject to CRS. If you don't have a U.S. passport or U.S. address, you won't be subject to FATCA. It's possible to get a tax residency in a third country, where you'll never stay or do business. This can be used when opening bank accounts. It means that any CRS data exchange will be sent to a country where you have no connection. There are also countries that are part of CRS but choose only to send data. They don't receive data on their citizens and residents. These are known as voluntary privacy countries. CRS and FATCA generate too much data. Governments don't have the resources to investigate everyone. As more people become aware of these dystopian tools, they'll take avoidance action. Nobody wants to have their financial privacy compromised in this way. There are so many loopholes that everyone should be able to find one that works for them with little effort. If you'd like more details on CRS and FATCA loopholes that you can use to keep your privacy, follow the link in the description. Liberty Mundo helps high net worth clients navigate the offshore world. Our goal is to increase your freedom and protect your assets. We do this by helping you get new overseas residencies and citizenships around the world. This means your travel options can never be restricted by any single government. We protect your assets by setting up legal structures that are impossible to penetrate. These structures can include trusts, foundations, and offshore companies. The exact structure will depend on your individual needs. Follow the link in the description to get started on your personalized offshore blueprint.